Today's Cardinal lesson is about life insurance in retirement. A lot of folks think you don't need any life insurance in retirement. Kids are grown, mortgage is paid for. I tend to disagree with that. I think when a person passes away, no matter how old they are, the survivors need money. We're talking about your children, your spouse, your brothers and sisters, whoever is left behind. People need money right after a person passes away, and they generally need it quickly. Now, we're going to talk about how much money do you need. Well, at a minimum, I'm going to say $25,000 worth of life insurance. And you might have carried term insurance your whole life, but we're going to talk about whole life insurance, so that this is in force when you pass away, no matter how old you are. Now, so how do I arrive at that number? We're going to start with $10,000 for a funeral. We're going to talk about $2,000 to pay an attorney to settle your estate or probate your will. We're going to talk about $1,000 to pay an executor, the person that's close with you that is going to go through a lot of trouble to see about your affairs after you pass. It's appropriate to pay them at least this much amount of money. And then we're going to talk about some income replacement. Is your Social Security check is going to stop when you pass away, and that's a big source of household income for folks. And you say, well, what do I need a Social Security check for after I'm gone? Well, if you live alone and one of your children is going to be looking after your place and looking after your affairs and selling your house or whatever's going to be done, they're going to need to keep the place up. They're going to need to pay the bills. And when that Social Security check stops, we're talking about $12,000, which is just a limited period of time. That's $2,000 a month for 6 months, or $1,000 a month for 12 months. When you have a married couple, this is very hard on a lot of married couples that have two Social Security checks. The smaller check's going to go away when the first person passes away and leaves behind a widow or widower. So we're going to look at $25,000. Certainly, many people buy much more than this, and that's available to you really at just about any age, up into the 80s. So now I want to talk about what type of options you have, and it's important to go to an independent agent to get advice from somebody that represents a whole bunch of companies. So I'm not talking about any one company here. These are some numbers I pulled out of my books where we address this subject. And you know, what we've done is we've just put up a female, age 55 and age 70. Now, obviously, if your age is in between there, the price is going to be somewhere in between there. If you're a male, it's going to be about 10% more. And if you're older than 70, it's going to be more. But this gives you a general idea of what we're talking about. So like full underwriting, you know, what that means is that you're going to get to take a free physical. It's going to be complimentary, and they're going to send somebody out to see you. Go through an extensive health question. You can have some health conditions and still pass this stuff, but it's going to be, and it's going to have, obviously you can see the prices for $25,000 worth of insurance. It's going to make it very competitive for you. Now, simplified underwriting is just that. We're going to ask you some yes/no questions, then you're going to go through those on the phone with the insurance company, and then they're just going to issue the policy. And you can have some health conditions, even some pretty serious ones if you've been stable for a while, and qualify for this type of insurance. We have about 20 companies that we offer this through, so generally, depending upon the condition, we can get somebody placed with one of the companies. And then you've got your no underwriting, which is just, there are no health questions. You could have kidney dialysis, you could have diabetes, severe heart condition. I mean, no matter what, you could otherwise be uninsurable for these kind. You're able to apply for this and get covered. Then another topic that I wanted to get into is what a single premium whole life insurance policy is. And that is simply where you're going to make a one-time payment to the insurance company, and that's going to buy you and your survivors a $25,000 death benefit that you don't have to pay anymore. So you're effectively, if you're age 55, you're turning $10,000 into $25,000 at your death, tax-free to your survivors. So, you know, an added point is this may look small to some of you, and it is small. It doesn't look small to a beneficiary. But you know, if you wanted to go to $100,000 worth of coverage, you could simply multiply these numbers by 4 and then maybe take off a little bit because you get a bit of a volume discount. This is an excellent way to leave money to children and grandchildren, or perhaps to your church or another charity. The money just goes right there. So if you want to learn more about this, I've written about it in both of my books. You can find my books at cardinalguide.com/life insurance. And the life insurance is under the 7 Worries tab at cardinalguide.com. Our phone number is 919-535-8261. I'm Hans Scheil, and I thank you for listening.